Hey guys, it's your girl Lakina, your favorite tax strategist and financial fortress builder. The IRS just dropped this new inflation adjustments for the tax year 2026. And yes, this one's tied to the one big beautiful bill. Now, don't let the name fool you. The bill comes with some real changes you'll feel in your wallet. So before you panic or zone out, I'm breaking it down plain and simple. Let's get started. Alright, so before we dive into the numbers, let's clear up a big question that I get every single year, and it's valid. People want to know, what's the difference between the standard deduction and itemizing your deductions? So here's the deal. The standard deduction is like your automatic IRS discount. You don't have to show receipts, proof, or spreadsheets. You just take the credit and it reduces how much of your income that really gets taxed. So for 2026, the new numbers are drum roll. Single, $16,100. Married filing jointly, $32,200. Head of household, $24,150. That's money you don't pay taxes on, period. And most people, well, about 90% of Americans take the standard deduction because it's simple and it's quick. Now, if you got bigger expenses, by all means, you might want to itemize instead. And that's when you'll list things out like your mortgage interest, your property or state taxes, charitable donations, and those big medical bills. So itemizing means you're saying to the IRS, hey, I got enough real expenses that I can save more by listing them out. If you itemized your deductions and they total more than a standard deduction, then you want to itemize. But if they're less, you might want to stick with the standard. So for example, if you're single and your deductions total $14,000, the standard deduction is a little bit more at $16,100, which saves you more. But if your itemized deductions hit $19,000, of course, itemizing is the better move. Now that you get the difference, let's look at those numbers and how they changed in 2026. So for 2026, the standard deduction increases to $32,200 for married couples who's filing jointly, $16,100 for those filing single, and $24,150 for the head of household. It's not a huge jump, but it's something. And in times like this, every single dollar matters. The IRS calls it an adjustment. I call it inflation finally catching up to our grocery bills. Because let's be honest, those children of mine, and I'm sure of yours too, their favorite place in the house is the kitchen, okay? Now let's talk about tax brackets where your real money moves. The top rate is still at 37%, but that only hits if you're making over $640,000 as a single filer or $768,000 if you're married filing jointly. Now here's the rest of that lineup. It's $35,000 for incomes over $256,000, 32% for over $201,000, 24% for over $105,000, 22% for $50,000, and 12% for $12,000. And anything less than that is 10%. So most folks, they live in that 12 to 22% zone, but that's why I always say every dollar has to have a destination.
At Tax Savvy Refunds, we understand that taxes is an all year round concern and not just an April event. That's why we're so proud to announce that we're providing services year-round so you can get the support you need when you need it. Here's the best part. You don't even have to leave your home or office. We help you virtually, anywhere in the world, as long as you have internet connection and a working phone line. So if you're tired of looking and searching for a tax professional throughout the year or during the summertime, reach out to Tax Savvy Refunds, click on our website at taxsavvyrefunds.co and book your appointment right now. We have a ton of services that can be able to help you no matter where you are in the world. Talk to you soon.
Don't wait until tax season to find out where yours really went. That's how you get taxed more. And I don't want that for you. None of you. Okay? Now for my parents, families, and small business owners, listen up. The Earned Income Tax Credit maxes out at $8,231 for 2026 if you got 3 or more kids. The Adoption Credit goes up to $17,670 with up to $5,120 that's refundable. And my favorite, the Employer-Provided Childcare Credit now jumps from $150,000 to $500,000 or even $600,000 if you're a small business. So if you're providing childcare or early learning programs, you're winning big, real big. Real big. So for health savings and gifts, if you've got an FSA account, that's a flexible spending account. You can now stash about $3,400 of tax-free dollars. And if your plan allows carryovers, you can roll up to $680 into the next year. Now for my global earners, the foreign income exclusion rises up to $132,900. Gift givers, the annual gift limit stays at $19,000, but if your spouse isn't a U.S. citizen, you can now give up to $194,000 tax-free. Can we dance? Can we dance to that? You know what? We might need to go overseas. Let me stop playing. So generosity and strategy can go hand in hand. Now, estates and legacy builders. Hey now. For my legacy builders, the estate tax exempt is rising to $15 million per person. That means you can pass on serious wealth before estate taxes even come to play. Do you hear me? Do you hear me? And if you're not there yet, this is why we build trust, LLCs, and insurance plans to make sure your legacy grows tax efficiently. Okay? I should have had a mic drop. That's a bar. Okay. Now, what did some changes stay the same? Or what's some of the things that stay the same? The personal exemption tax is still the same. The itemized limits are gone for most people, but capped for top earners. And the lifetime learning credit phase out. Range still sits between $80,000 and $90,000 for singles, or up to $180,000 for couples. And if you're planning to go back to school, check your income first. All right. Now, takeaways. The one big, beautiful bill might sound fancy, but the beauty is in how you use it. Every one of these changes is an opportunity to plan smarter, save better, and build stronger. If you want me to break down how these updates affect your tax plan or your business, drop tax strategy in the comments and I'll make a video just for you. I'll try to. But you really want to get on the books and book a call with me, because then I can give you a personalized plan for that. Now, if you still need information on taxes, what lane you should be filing, watch the next video and I'll break it down for you. Talk to you soon. Bye.